What is up, people? The internet. It is me, Real American Politics, back in with a new video. And it's time that we answer the simple question: are we heading for a recession? And is the financial system about to collapse upon itself? These are two major questions that people are asking after the events of the recent few days. Now, I want to put this as a quick disclaimer. I am not a financial expert. I'm not somebody that's studied finance for 50 years. I do, however, have some basic understanding of how the financial system does. We're just the bare minimum. So I'm not saying take everything I say for 100%. I'm just giving my opinion based on the articles that we're going to read today, discussing what happened with the financial turmoil. Now, before we continue with today's video, I hope you enjoy these type of videos. If you do, smash the like button down below, subscribe, share with your friends, hit that little bell, follow the Twitter account in the description down below, and join the channel today. Guys, just for $3 a month, you could join Real American Politics, which is a phenomenal deal as it helps support the daily content we all know and love. You love that daily content? Well, that's the best way to support it. So I hope you join today. Alright, before we talk about the banking crisis, I want to give a bit of perspective on how things were doing before this happened. So, before we enter 2023, most people kind of agreed that the United States was heading for an economic recession. There was a lot of indicators to say, yeah, 2023, maybe 2024, there's trends that the GDP and the economy is going to fall. Unemployment may rise for many reasons. Inflation, that is a huge reason that many people are expecting it. But not only that, the interest rates. Now, interest rates continue to go up while inflation kind of just stays the same. That's a worrisome combination. And interest rates make it much harder for businesses to get loans, cost more, etc. So you have a double whammy of interest rates jacking up with inflation kind of just staying the same. It's high 6-7% rate. And not only that, there's shortages everywhere, and there's some indications in the job market that we could be heading for a recession. But at the same time, you have major tech companies laying off thousands of people. You had Microsoft, I think 2 weeks ago, they laid off a couple thousand. Meta just yesterday, they jacked a lot, like 10,000 people out of jobs. It's like, yeah, there's something definitely a lot of these companies know. We're probably going to get hit with some kind of recession. But there's some people saying, maybe this is just, the high inflation rates, that things are just costing too much. We're not exactly heading for a recession, but maybe a slowdown. Maybe an economic slowdown, not necessarily a recession, because unemployment claims are not actually that high, and people are still spending a lot. Well, that was kind of before this, or actually this, the banking turmoil. Now, let me be clear. There's some fearmongers out there saying, be at warned that you will lose all your money in savings account. Pull your money now. No. If you're in a bank in America, if you don't know, after the Great Depression, when a lot of people lost their life savings because of bank runs, which is when a bunch of people go to a bank all at once and, well, they pull out their money and the bank just collapses. The U.S. has created an insurance policy for basically every bank where up to $250,000 of your dollars are insured. So if you have $70,000 in a bank, you can rest at night easy knowing, hey, that money is fine, all right? You're not going to lose your life savings. However, there still is some concern for the banking system and the financial sector as a whole. Now, Silicon Valley Bank is one of the largest names in the tech world. They invest heavily into tech companies. Some of the bigger names was Roku. Everybody has a Roku stick, that little thing that you have for TVs and stuff. I mean, Roblox was in this. Freaking Roblox. I mean, come on. Like, these are some big names that were involved. Well, this bank just collapsed on Friday. Yep, the second largest bank failure in American history, which was Washington Mutual in 2008. That is not a good category to be near, being close to the largest bank failure in American history that then proceeded to have one of the greatest recessions in our nation's history. That's not good. And that's where people are freaking out that, hey, $200 billion worth of assets in this bank, well, it just collapsed. $300 billion in 2008. So not as bad as it was in 2008 for a major bank failure. But the fact remains, you do not want to be in the same solar system as the 2008 recession when it comes to Washington Mutual. And that's not all. There was a second bank failure from what I've heard. You scroll down here, and apparently Signature Bank failed on Sunday, which is another $100 billion. So you combine the two, that's $300 billion worth of assets in banks that just collapsed. That surpasses Washington Mutual. You see why people are a bit worried about the financial sector? These are two big hitters. Now, they're not as big as JP Morgan, which is like $3 trillion, but I would be a bit worried because Jim Cramer, the guy from CNBC, the guy that anytime he says something, the markets do the opposite thing. He said JP Morgan is a strong system or a strong bank or investment, whatever. Well, if JP Morgan fails, we are 100% screwed. But yeah, Silicon Valley Bank, what happened in a nutshell was a bank run. Bunch of people pulled out their money all at once. Now, Silicon Valley focuses mostly on tech startups, and you get the point. Now, there were some signs of this a couple days prior, as last Friday, apparently they had huge losses for the bank, or Silicon Valley, yeah, and the tech industry panicked, and startups rushed to pull out their money, resulting in a bank run. That's what happened. Last week, the company completely fell apart. The bank fell apart completely. So bad so, the Federal Deposit Insurance Corporation announced on Friday that it would take over the 40-year institution after the bank and its financial advisors had tried and failed to find a buyer to step in. The takeover put about $175 billion in customer deposits under the control of federal regulators. So yeah, that's what I'm talking about, the federal regulation. Don't worry about your savings. Just, it's a bit worrisome that, yeah, one of the bigger banks in America kind of just collapsed. Now, like this article says, it puts spotlight on smaller and mid-sized banks, which tend to focus on niche businesses and can be more vulnerable to bank runs than larger peers. That's why, like, JP Morgan, hopefully they're fine, but if JP Morgan falls apart, yeah, 2008 is going to look like a walk in the park. The most immediate concern is that a failure of one would scare off customers of other banks. This is what people are freaking out the most about. Because if a bank like this falls apart, what about your local banks? Are you going to really trust your local banks? It's like, there's a bit of skepticism for some people if you would do that. And I understand that. It's like, I don't know if I want to put my money into banks either. I just mean example, but still it's like, whoa. Now, these two banks, like I said, are small in compared to JP Morgan. I mean, JP Morgan has $3 trillion. But bank runs can happen when customers or investors panic and start pulling their deposits. On Monday, smaller banks rushed to reassure customers that they were on a firmer financial footing, which is a good thing, but it's still concerning that stocks in a lot of these banks fell 65%. First Republic Bank took the worst beating, 60%. Now, bigger banks only fell 7 to 3%, which that's still kind of large, but nowhere near as bad. With all that in mind, however, does this mean we are heading towards a recession? I'm not saying this will be the only reason we have in a recession. After all, it's not bailouts just yet. And it explains here, it's not necessarily a bailout. The people that are getting helped are those that are federally insured. The investors, they got told to screw off. You caused this mess yourself. But the people that actually saved money at the bank, they're fine. And it's not necessarily a bailout. And hopefully, we get some answers because apparently, weeks prior, they knew about this. Apparently, a former chief executive of Silicon Valley Bank exercised options in late February that permitted him to sell shares worth about $3 million for about $287 a share. The shares were to close in a regulatory filing on March 1st. Yeah. So they may have knew something bad was happening, and they didn't say anything about it. They kind of just, oh, don't worry, nothing's bad here. Yeah, I hope that we get a true investigation into what happened, because if this is happening here, it's like we should be very, very worried about the financial sector as a whole. But I'm not necessarily saying the financial system will collapse. There's just a risk that a lot of these smaller banks could potentially have similar problems. Hopefully not, but this is a story that we got to keep up to date with, because it could be a big indicator to see how the financial sector goes the rest of the year. Anyways, folks, thank you so much for watching. If you did enjoy this video, smash the like button down below, subscribe, share with your friends, hit that little bell, follow the Twitter account in the description down below, and join the channel today. Thank you so much for watching. We'll see you guys in the next video. Godspeed to all of you.